So today's Cardinal lesson, we're talking about the income tax, the federal income tax that you pay on your Social Security check. And there's been talk about that tax on Social Security being eliminated. Okay, so you just be able to keep your whole check. And so what we're doing today is we're really talking about, so how much tax do you pay and what is that tax and who pays it? So I want to put it to Tom, and I want Tom to give us an idea of why we're doing this video today.
Yeah, I mean, we're doing this video because most people, and this might be you, really do not understand or have no grasp on how this tax actually works on Social Security. And it is confusing, right? We'll go through the formulas, it doesn't make a lot of sense, but it's important to know how this works because the more you pay in taxes, the less you get to keep. And so, as we're doing financial planning, we want to try to at least be aware of this and plan for this and do some things around it. And so, we'll go through some examples today. Let's bring up the show notes. We can find these at the link below our video. They're also on our website. We have the board, and then we have sort of in words, sort of how they calculate the tax on Social Security. We'll go through that when we're going through the board. And then again, I'm going to do this live here in a second, but these are sort of just screenshots of what we're going to go through. And you'll be able to see when I'm building out sort of sample tax returns, some really examples of how Social Security is taxed for a couple different people. And so I'll turn back to Hans, and then we'll go through the board a little bit, and then I'll come back on and we'll go through the examples.
Okay, so it's pretty simple, is that if you have Social Security only and no other income, you're not going to pay any tax, federal tax at all. And then if you have Social Security only, or Social Security, and then you have some income, but it's not a lot, you're still going to pay no income tax at all on your Social Security and no income tax on your income. So you put those two things together. If you have a lot of other income, then you're going to pay tax on that lot of other income. And then you have Social Security, you're going to pay tax on the Social Security too, based on the amount of other income that you have. So that's kind of a general description. And something that I did some research on this. 50% of the Social Security recipients or Social Security check cashers pay zero tax on their Social Security. So what we're talking about for the federal tax is we're talking about half of the Social Security recipients. And this is the formula that you may have seen before, and for single filers and for married filing jointly. So these are the numbers between Social Security and no income, Social Security and a little bit of income, Social Security and a lot of income. So I'll put numbers to that. For single filers, your provisional income is less than $25,000. So that means that, and the provisional income has a formula. It takes your adjusted gross income, which in this case would be $64,000, and in this case, $102,000, plus your non-taxable interest. So if you own tax-free bonds and you're collecting interest on that tax-free, they get you on the Social Security because they add that back into the formula. It's kind of like IRMA. And then they take half of your Social Security benefits. So there's a formula that they plug in. And if your provisional income is less than $25,000, no tax. If your provisional income is from $25,000 to $34,000, up to 50% of your Social Security benefits are taxable. And notice the up to. And then the provisional income of $34,000 or more, 85% are taxable. Now we get to the married filing jointly, these numbers just change, and it's less than 32,000, no tax, 32,000 to 44, 50% tax, 44,000 and up to 85% of your benefits are taxable. So many of you have seen this, and then just people jump to some conclusions and they just kind of do some numbers in their head. And I think they're generally going to arrive, if they have a pretty good sized provisional income, that they're paying more tax than they actually do on their Social Security. So now I want to push it to Tom, and I want Tom to go over the two examples, but specifically Tom's going to get into the software and he's going to calculate the tax on our two examples real live with you.
Yeah, and we've done this in the past in previous videos. And so this is some software that I use to sort of build out sample tax returns. It's an Excel file that's pretty detailed. So I'm going to go through, try to go not so fast, and really show you how we do this. And then we do this for a lot of times when we're doing financial plans. We will sit down and do this to help us calculate things. And so for the single person, I put in a birthday that makes them 65 in 2024. And so that brings in the standard deduction. They have Social Security, so they're getting 36,000 from Social Security. And so that puts in there. Now, if to Hans's point earlier, if that's your only income, 36,000, you have no tax, right? So you get to keep all of it. There's no other, you don't have to pay any federal taxes. State taxes, we're not going to get into that in this video. Most states don't tax Social Security, some do. And so if you're in one of the states that does, we'd have to do that. We'll do that separately. But right now we're just focused on federal taxes. And so, okay, this person has 36,000 of Social Security, and now they're taking 64,000 annually out of their IRA. And so we plug that in. It's all coming out of a traditional IRA, so all of it's taxable. And then we go back to the 1040. And so the software is doing the calculations all behind the scenes. And so you'll notice this IRA amount coming in 64,000. We have the Social Security benefits, the gross Social Security benefits of 36,000. 30,600 of it is taxable. And so those numbers get added together to come to your taxable income, which is down here, 94, or adjusted gross income, excuse me. That comes to your adjusted gross income. You get to subtract the standard deduction. And so for a single filer, it's $16,555. And so now they get a taxable income of $78,000, just over $78,000. You then take that back to the tax brackets that they have, and we've done videos on that. And so in summary, this single person in 2024, given these numbers, would pay $12,230 of federal taxes all in. And so on the board, we have that just over 12% sort of tax on their gross income of $100,000. And so where I see a lot of people get mixed up a little bit is they know, okay, I have $100,000 of gross income this year. They go look at the tax brackets for a single filer. That puts you in the 24% tax bracket. And so oh man, I'm paying 24% tax on my income. That's not actually true, right? I mean, we just went through the math here. It's really effectively 12%. And so I think it's important to know this and not just assume how much you're going to pay. Another area I see people get really mixed up on is when they first start doing some research on this, is they see this calculations, these formulas that Hans has on the board, and they say 85% of my Social Security is taxed. I mean, and what they think in their mind is I have to pay back 85% of my check, which is obviously not true. What's happening is up to 85% of your check is taxable income, and then it gets put on your tax in the tax return. You go through the calculations on the tax brackets and come up with a number there. So let's go to the second example. This one's going to be a married couple. So we're going to get rid of the single filer. We're going to have two people who are 65 now. We're going to go through, they're both getting checks. We have 48,000 that they're getting in. So I think that was what we had on the board there. So we'll do 24,000 there, and we'll do 24,000 here. And then, let's see here. Hans, what was the IRA distribution we did for this one?
102,000.
Okay, 102,000. They have a gross income of 150,000 is sort of what we're showing here. And so 102,000 of IRA distributions, $48,000 of Social Security. Again, it runs through the same calculations now on a married couple as opposed to a single filer. Again, only 40,000 of their Social Security is taxable. It comes down to their adjusted gross income. You subtract the standard deduction, the 32.8 or 32.3 for this couple. Their taxable income is 110. Again, based off the tax brackets, is 14,416 of federal tax owed, which relates to I think about like a 9% tax rate on their whole income of gross income of 150,000. So again, people I oftentimes will overestimate the amount they're going to have to pay on taxes on things like this. And I think it's helpful to know this because what people end up doing is maybe withholding too much tax, getting a huge refund at the end of the year, which I guess isn't the end of the world. But most people would rather just keep that money throughout the year than paying more than they have to, sort of as they go. And so I'll turn it back to Hans. We'll go through a couple more points on the board here.
Well, yeah, I mean, just those two numbers, this single person paid, which gets a pretty good sizable Social Security check, 3,000 a month. They're paying 12.2% taxes, or about 3,800 of that is taxable. And this couple that 48,000, and I'm just trying to make this for upper middle income, higher income people um, that have 48,000 of Social Security check. They're living off 150 grand a year by making withdrawals out of their IRA or a pension or something like that that's taxable. They're under 10% at 9.6%. So they're paying on their Social Security about 4,400 bucks. And we could go in and eliminate the tax on the Social Security if that in effect does happen, and we'll do that on a video in the future if that gets passed, that it gets removed. But it would drive their taxes down substantially. But I just want to show people what you're paying now on your Social Security check. And I think overall in taxes, most people that get into retirement find out that they're paying less taxes. Because if you're a single person making 100 grand a year and it's all coming from your job, you're paying a lot more than 12,000 in taxes. And so as people prepare for retirement, they tend to way overestimate their taxes. And that's where financial planning, what we do is we get them real at what it exactly is. So I just want to make some points about all of this is that 50% of the people that get a Social Security check don't pay any taxes at all. So there's going to be no benefit to them to eliminate the tax on Social Security. Tom had mentioned earlier, there's 9 states that tax Social Security. Well, it's actually 9 states. And I think, no, it's just 9 states. And it's Connecticut, Colorado, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. Their state income tax includes some level of Social Security for some people. So I don't know what they're going to do about those if they eliminate this tax. And then I want to show you collectively in 2023, I went back to my old video in the show notes with the Social Security Trustees Report. In 2023, the government collected, or the Social Security Administration collected 50.7 billion in federal income taxes on Social Security recipients from their Social Security checks. And that 50.7 billion went right back into the Social Security Trust Fund, or it was used to pay benefits. You can put it either place. But that's about 5% of the benefits in 2023 were paid from the federal taxes on the Social Security recipients. So if the tax is eliminated, we're going to have to find that $50 billion from somewhere else to put the Social Security Trust Fund in the same place that it's headed. So that's a whole nother area that they're going to need to address, which is the funding and the overall funding of Social Security. So I want to bring Tom back on for some comments on the whole thing.
Yeah, I mean, I think what Hans had mentioned there is a lot of times people they're earning maybe 100,000 from their W-2 income, like a job, and they think they need that same amount of income to have the same lifestyle in retirement, and that's just not true, right? I mean, I think you don't have any FICA taxes that's paying the Social Security and Medicare tax through your payroll, which is different than what the tax we're talking about today. You don't have 401k contributions. There's a lot of things that you don't have to pay in retirement. And so you don't need as much gross income, before tax income, when you retire. And so I think it's important to know that we do that when we're planning for the future, when we're meeting someone and they're thinking about retiring. That's why we start with how much money do you want to spend, right? We sort of build it from the bottom up. It's like, let's start with how much you want to spend. We'll help calculate the taxes and we'll work backwards as opposed to starting with the gross number, because people often will overestimate how much they need gross income versus the net income, the after tax income. So
Okay, and I want to position the video today within the scope of comprehensive financial planning as we do it here at Cardinal. Obviously, we've been talking about Social Security today. We've been talking about 401k IRA money because that is the other income for a lot of people that have other income to go with their Social Security check. They're getting it out of their taxable IRA. We're talking about income when we create an income plan for the future, present and the future. We're starting with the base amount of the Social Security. And many times, if the people are 64, 65, we're delaying one of the Social Security checks till 70. But in any case, when we're putting together an income plan, the Social Security is a big part about it. It's the first step. And then income taxes. That's what the whole show has been about, is income taxes on Social Security. So I'd like to bring Tom back on. I'm Hans Scheil.
And I'm Tom Griffith.
And we thank you very much for listening.
Thank you.